I'm Roger Montgomery from Montgomery Investment Management, and welcome to this, the end of financial year update for the Montgomery Small Companies Fund. During the 2021 calendar year, the fund produced strong absolute performance and strong relative performance. But of course, everything changed in the first half of this year, with war in Ukraine, lockdowns in China, and more recently, concerns about both stagflation and even recession, making the investment climate a tough one to navigate. Of course, as history demonstrates, this too will pass. Joining me to discuss the fund's performance and the market more generally is Dominic Rose from the Montgomery Small Companies Fund. Thanks for joining us, Dom.
Pleasure, Rog.
Dom, I mentioned that it's been a particularly tough market to navigate. This global sell-off's been challenging for everyone, but particularly for investors like us who focus on quality. Can you perhaps shine a light on the reasons for the recent underperformance?
Sure, Rog. Look, the simple answer would be we had too much of the bad stuff and not enough of the good stuff. Now, in the last 6 months, the good stuff, well, that was energy, and the bad stuff, that was consumer discretionary, retail, and technology. But look, Gary and I have dived deeper into the numbers, and actually they tell a bit of a different story. Sector allocation explained a small part of the underperformance over the last 6 months, but the bigger driver really was stock selection. Look, Gary and I are stock pickers. We normally go after things that we see, and the returns have been good in the past. The last 6 months, we got 5 stocks wrong. They had earnings downgrades, and they were in sectors that the market was looking to rotate out of. And so 5 to 10% earnings misses, they were met with 30 to 40% share price reactions. So it was quite a savage reaction in the last 6 months. But look, certainly Gary and I are not stepping away from the fact that we got an abnormally number of earnings misses this last 6 months.
And so, Dom, I guess investors know that we're going to make mistakes from time to time, but they probably more importantly and quite rightly demand that we don't repeat them. So what have been the lessons learned?
Well, look, investing is a humbling experience, and the market teaches you lessons every day. Look, I think the key lesson over the last 6 months is that you need to be prepared for a black swan event like the Ukraine war that could arrive and really challenge the macro outlook. And, we've seen 40-year high inflation. We've seen the interest rate dynamics really change, and the impact on certain sectors has been profound. And I think, we certainly probably got caught out with too much technology and retail exposure and probably didn't rotate out of those sectors quick enough.
I guess the other thing I know investors ask a lot is, the question always varies, but it pertains to reassurance about the safety of their capital. If you think about our investment philosophy, the stock selection process and portfolio construction, what are the reasons to be optimistic? What are the reasons to be reassured?
Sure. Well, look, I think in terms of investment process, nothing's changed. Gary and I often talk about being active and pragmatic investors. We like to spot market change events where market share can change hands, and often smaller companies are the winners during those exchanges. And we're still looking for opportunities that the market volatility might present. And we've recently added the energy security thematic exposure to the portfolio. And we're also taking the opportunity to buy a bunch of sort of more defensive growth companies that have been priced, quite attractively relative to their historic multiples. So we've upgraded the quality of the portfolio, I would say. Looking
back, the returns for 2022 have been the worst since 2008. And back then, the market fell about 41%. Well, the ASX 200 did anyway. Ultimately, it passed. And we both believe this will pass as well. Is there a particular stock that you'd like to call out as one that you're optimistic about?
Sure. Look, I might talk about a stock that we haven't spoken about before, and it's a recent addition to the fund. Again, taking advantage of a market pullback where we've had the opportunity to buy a very high quality company at a discount to what it's traded at in the past. And the stock code is IPH. The company's called IPH Limited. It's got a $1.5 billion market cap. Now, these guys are intellectual property patent attorneys, not lawyers, but patent attorneys. And so this is a business with a very strong competitive position in Australia and New Zealand. They have about 33% market share. That's a really steady defensive business. driven by large multinationals looking to protect their IP rights globally. Very capital light to service business, and so the returns on capital are very high. And that Australia-New Zealand business grows its earnings about 3 to 5% through the cycle. Very, very high visibility of cash flows and earnings certainty, which is coveted in this kind of market conditions. And then it's also got a higher growth Asian business that's growing its earnings 7 to 10%. So look, the business has got great earnings certainty, great balance sheet. There's optionality for further mergers and acquisitions. The company's made a number of successful acquisitions over time, and good dividend yield as well. You get 4 to 5% yield, 5 to 10% earnings growth. Aim small, miss small, pretty good returning company, and we think very high quality.
Yeah, Dom, I remember that company well when they listed and in fact went and visited their offices over in Singapore, and they are a very high cash flow business. That's all we've got time for today. You may have some more questions for Gary or Dom or myself about the Montgomery Small Companies Fund. If you do, feel free to send us an email or give us a call. That's all we have time for today. We look forward to hearing from you soon.